Yo, what is going on, internet? Today I wanted to talk about FOMO investing. And for those of you who do not know what FOMO means, that is the fear of missing out. And get into the weeds a little bit around some of the hidden costs of actually engaging in FOMO investing. And I think at some point in our times, we've all been victims, if you will, of FOMO investing, have either traded something we shouldn't have traded or sold when we shouldn't have sold. The list goes on and on, right? But I think I wanted to get into some of the nitty gritty, if you will, here and break it down a little bit. As a reminder, none of this is financial advice. Always do your own research. Now, with FOMO investing, there really isn't like a fantastic way to quantify it per se, but we can kind of boil it down to buying when things are really, really high and selling maybe when we shouldn't be selling. So when things are, dropping on any given day, market's going down and you sell, right? Now, ultimately, it does depend on your long-term goals. Obviously, if you're someone like me and you just continually buy the S&P 500 or the NASDAQ, you're always kind of investing no matter what's going on. So that's one approach. But if you're someone who is into single names or maybe super hot ETFs like DRAM or SMH, whatever, the list goes on and on, you're maybe trading these, you're maybe kind of thinking more short term, you're kind of going around the news. And the real key here is that this is emotional. Ultimately, there isn't much thinking per se that's going on. It's really the human body's desire to not miss out on the next big thing. And that's really all of what FOMO is, and it applies not only in investing and trading, but in life too. The way I like to think about FOMO investing is that it can often follow a very predictable cycle sometimes. So we see this all the time on social media and the media itself, where a given name gets a lot of press and PR, and all of a sudden it's like all over the internet in like 20 minutes, and it's like, OMG, what the hell is going on? And when we see this as retail investors, we are often on the other side of that trade. And what I mean by that is by the time it comes out in the news, a lot of times the market itself has already priced that in, and it's already bought into the swing. So those big institutions, backed by all the research and analysts and all that great stuff, they're kind of already there. And that can put us retail folks in a little bit of a tricky spot, since we're not acting with that full information that the rest of the stock market has access to. Now, a textbook example is the GameStop meme stonks, whatever the hell that thing is called, in 2021, where overnight millionaires were created, but also people lost a ton as well. I think GameStop peaked at around $480-ish a share, which is absolutely ludicrous. But what that entire event showcased was FOMO investing. It was individuals, retail traders that were trying to create a short squeeze in the market, which is a whole separate conversation in and by itself. But ultimately what that does is that can send a name parabolic and go way, way, way up, which is exactly what happened to GameStop. But what's really tricky with that is that the people who bought at 400 through, $450 a share, whatever, ultimately kind of got crushed when the stock fell. So there's a lot of people that were buying in to the meme, to the hype, to whatever their buddy was doing, and didn't really appreciate exactly what was really going on. And that made, for some, millionaires, and for some, big losers. And another more probably recent example I'd argue is Micron. I think early 2025, it was somewhere hovering around $100-ish, and as of today, it's floating around somewhere around 800 with peaks of 1200 over the past few months. That's a huge gain that people missed out on by not buying Micron a year ago. But it's that FOMO feeling of could have, should have, would have, whatever. And there's a lot of people that I know that ended up buying in closer to the all-time highs. And you can make an argument for the kind of long-term success of Micron and may have another move or continue to go up over time. That's great. But ultimately, it's that initial double, tripling of the stock price that people go, OMG, what the hell just happened? And they feel very, 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 very left out. So I think with this idea of FOMO investing, it often leads to individuals focusing more on over-optimizing their portfolios to catch the next wave before it hits. And this can look like many different things. It may be buying into SpaceX after the IPO bump, or trying to somehow play the DRAM ETF, right? It's just a general theme of trying to get on the next hot thing before it's being talked about in the news. And me personally, I do believe that social media, but also the media as a whole, can sometimes make this a little bit worse. People are very excited about the gains and don't really ever talk about the losses, although if you're a Wall Street bets regular, obviously people post about it, but you don't always get that same level of coverage in the broader financial media. And I think it's a very difficult thing to sit with when you're putting a lot of time and effort into running your own portfolio or trying to be really disciplined about investing, and you see all these great success stories of the next AI stock going to the moon, and you're kind of thinking, hey, what about me, right? And that's tough to sit with. But ultimately, at the end of the day, an individual's consistency and ruthless discipline, if I'm being honest, is what's going to create that long-term wealth path. Now, I am someone that definitely has had his mistakes of doing a little bit of FOMO investing in my time, but every single time that I come across a new market theme, some single name, whatever, doesn't really matter, the next big thing, right? I always ask myself what's actually going on with the company, with the coverage, and why is an individual name moving the way it's moving. And I think that sounds very simple, but it's putting the time and the effort into the research and understanding the sentiment, the fundamentals. It's kind of getting like your finance nerd on for a minute and actually understanding what's going on. And it sounds simple, right? But it goes back to that you got to really do your own research. And if you find that you're spending all this time and effort into the research, well, a lot of times, at least for me, I'll wear myself out and just not do anything about it. So that's almost a whole separate issue, though. And the other kind of thing that I think about a lot is, what happens if it doesn't go well? There's always controversy and setbacks that happen with companies and the economy and all this stuff. And ultimately, at the end of the day, I have to be willing to risk my money if something goes wrong. And that's with any investing, right? But especially if you're going after, the next NVIDIA. It's some uncomfortable feelings, but it's something that we have to really be aware of and sit with. The last thing I'll add about FOMO investing is, and it kind of goes back to the concept of why you're investing in the first place, right? I think a lot of us that are out there are really thinking to ourselves, oh man, if I had just done whatever, bought X, sold Y, my life would be easier. And that's a really tough question to be asking yourselves and to be sitting with. And ultimately, it can feel pretty pretty crappy, right? So I think that is really, the key underlying emotion that we feel around FOMO investing. And I can say with certainty that I have absolutely been there. So to try and tie this together, the concept of FOMO is never going to go away. It's honestly more psychological and emotional than it is anything really to do with investing. It's key that we have to really think about how we engage with decision making with our money, right? And I think that's a really, really important concept to really ask yourself and master before you start getting into any other crazy trading. But I'm a huge believer in the fact that the investors over the long run aren't the ones who necessarily don't feel FOMO. They are just aware that it occurs and are able to kind of put it on the shelf, acknowledge it for what it is, and move past it. And if you're going to do crazy things with buying hype names and trying to trade a news cycle, whatever, just be aware of the downside and be aware of the risk that is involved with that. So yeah, that's just my opinion here on FOMO investing. As a reminder, none of this is financial advice. Always do your own research. Drop a comment below if you've ever made a crazy FOMO trade. Would love to learn how much you either gained or lost and on what name. And we will catch you next time.